What's going on, guys? A couple of weeks into this buyer broker agreement, and it pretty much seems like business as usual. However, there have been a few scenarios that have been brought to my attention where there was just a mismatch in how much compensation was going to be received from the seller side over to the buyer side. And so we want to make sure that we just don't miss an opportunity here to serve somebody. And I wanted to make sure you were also armed with different ways to kind of approach this. So I'm going to share a screen with you and kind of give you just a sample of a scenario that we've built out for somebody before. So this particular purchase was a 550 purchase. The normal way writing the offer, right? The seller is going to pay the buyer's agent commission just like normal. So we kind of frame that out with this first column here. In this example, 10% down. Let's just call it a 6.5% interest rate, and our payment's 39.59. But let's just say that the seller is not going to pay anything. So we need to get our full, in this scenario, 2.5% compensation at 13,750. We need to get somewhere else. So we're going to look at the loan. We're going to finance it into the loan. So we're not going to put quite as much down. We're not putting the full 10% down. You can see our loan amount changes here, but it really doesn't impact our payment that much. It does go up almost $100, but our out-of-pocket's about the same. This would be an option we could present to a potential buyer just to make sure it's the right way to go for them. Another option would be kind of the traditional way. So sometimes, as you guys know, sellers decide they're not going to pay anything and they'll just kind of be more aggressive on that price. So maybe there's plenty of room with the appraisal. Let's just simply finance it just like we did before. So just like any other concession request that we had in the past, we're going to basically ask for closing cost or your buyer's agent commission and increase it into the sales price. So in this example, we can also compare that to the buyer. You can see very similar in terms of the monthly payment, increase in the cash to close a little bit. Also, probably not the right move because it will impact things like property taxes. You can see a small increase here. Being a California property will have a small impact on the basis for property taxes. And then the last thing that we like to do is show the client what it would be if they just paid cash. So they get zero buyer's agent compensation to use your representation. They need to come out of pocket a little bit more. What does that look like? We can show them that. No difference on the monthly payment here, but it will increase their out of pocket. So I think framing it up right there with the right conversation around the different strategies really helps. There are different ways to kind of do this, even with down payment assistance loans, even with VA and USDA and FHA, all those different loan types. We have a solution for almost every one of those and a different creative approach, just given different scenarios that we may see in the real world. So if you're working with a buyer and you kind of need to come up with a plan, you're not quite sure if there's going to be compensation on the listings or not, reach out to us so we can kind of help you, present that. This is something that we try to do at the very beginning so that we get ahead of any of these challenges. And it also helps with our strategy as we're moving forward and writing offers in our current market. All right, hope this helps for you guys. We'll talk to you very soon.